Good afternoon, everyone. Welcome to Hit the Bid here on August 10th. This is Ty Robbie here with your Week 32 Market Watch. Today we're going to be running through our charts here and seeing what happened across the markets last week. We did see an uptick in volatility here in this cattle market after hitting some new all-time highs, seeing some wide daily ranges trading here, so a nice increase in volatility in that cattle market. Good recovery in the stock market as well. Each of our indexes pulling back and showing a nice recovery last week, getting this ball rolling higher in this big picture uptrend. Selling pressure continuing here in this oil market, and a nice weekly close here below a key level, confirming a new downtrend is potentially taking effect here, and new contract lows over here in this corn market as well. So nice action last week should lead to lots of good opportunities as we head into week 32. So let's get started. First up, we got our October live cattle. This market did see some nice upside early in the week, printing new all-time highs as well. This Monday's action, we did see swinging around that prior Friday's range, probing both the high and low before finishing the day unchanged, balancing out here with a little bit of indecision before seeing a nice strong push by the bulls, picking up nearly $10 along the way, printing a new all-time high there on Thursday at 232.75. Nice strong push up here. We're reaching just some pretty overbought and overextended levels, so the bulls just ran out of gas here before Friday's big breakdown. This market pushing lower, losing nearly $7 along the way off of that Thursday's close. We did get Friday's low here at 225.60, which will be our new bear pivot as we head into the week. This market has seen an impressive rally over the last 6 or so weeks here up into these overextended and overbought levels. So this pullback here on Friday, we should see this momentum carry into the new week. This downside continue here in the near term. We do have a nice big picture uptrend that remains intact, and plenty of support here below for price. So we have our key moving averages here at the 20-day and 50-day moving averages that could potentially act as support, as well as some key levels here around the 220 to 221 level, as well as this prior swing high right here around 216. Plenty of support down below. We're just seeing some wide ranges as volatility has increased here in this cattle market. So we do just want to urge caution not to jump in front of this thing, as we do have some pretty fast and unforgiving markets in these big wide ranges. But this market has been resilient, and as we saw last week, where we expected to see this pullback come last week, we did see another push up into those all-time highs between Tuesday, Wednesday, and Thursday's action. So this market has been resilient. The bulls continue to prove their strength here, and we expect to see this upside continue over the long term throughout the summer and into the end of fall. However, near term, this market's just coming off of these overextended levels, and it would be healthy for this market to have a little bit of a correction here and pull back and cool off from these little bit of frothy levels that we've seen recently. So look for this momentum to carry over from Friday's selling into the new week. We'll just want to wait and see for the price to balance out and find good support before committing to new positions. But we do expect to see dips be bought up here and this cattle market continue to rally. Over to the feeders now. Same story over here. This market continuing to show strength and nice resilience here by the bulls. Monday's action balancing out here as well, failing to take out that prior week's low though. And then Tuesday, Wednesday, and Thursday's action showing a nice strong push here. About $16 along the way up to that new all-time high, printing there at 350.20 on this September contract. A real strong push here. We've had about a 6-week move where we've picked up $50 along the way, all the way from $3 here on this recent pullback, all the way up to this prior high, or this current new all-time high. So nice strong move here. This market just has hit some pretty extended levels, as we can see down here on our heat index. Each time we've gotten above this 5.0 reading, we've had a multi-week pullback come from it, dating back here to March, where we saw some overextended levels here, getting a 6.1 reading here before this multi-week pullback. Also another one here back in May, where we saw a 5.6 reading before seeing this multi-week pullback, before we saw new all-time highs. Then just over the last couple weeks here, we have gotten over 5 last week, and the prior week and last week, showing some pretty overbought levels here. This market is definitely due for a pullback. We could see this kind of take some time to play out, but we do have plenty of support here, dating all the way down here to our 20-day and 50-day moving averages. We got some key levels down here at 326.5, which was a pretty important spot here back in early mid-July. Would be good to find support down here. Like I said, increased volatility here, so we have some pretty wide daily ranges. I urge caution from stepping in front of this thing, as we could see some pretty severe downside here. Just in the near term, following this limit down day on Friday, as we will have expanded limits on Monday for this September contract. The downside should play out here in the near term, but we do expect to see dips be bought up as this big picture uptrend remains intact. We'll just want to see price balance out at either some of these key moving averages or key support levels before we commit to new positions. But we do expect to see the upside continue here into the fall. Just however, near term here, we could see a little bit of a pullback, but be looking for dips to be bought up here in this cattle market as it remains strong, and it's going to continue to see some nice upside here into the end of the year. Let's head over to the December corn futures now. We did see a nice breakdown to start off last week, breaking right out of this support, the support level here at this 410 to 411 area. This market did see a nice balance here over the prior week, settling up in this 410 to 415 area before breaking down on Monday, seeing nice selling pressure all the way down to contract lows there at 396 and 3/4. A nice little relief rally kind of getting underway here across Thursday and Friday's action, pushing up back to retest the supply zone from below. We did see a push up there to that 411 mark before getting rejected there on Friday. So our bear pivot is going to be Friday's low there at 404 1/4. If we get continued offers below there, we could see the selling pressure pick back up and continue forcing this market back down below $4. However, in the near term, a relief rally would be welcome here in this corn market, as we have gotten down to some pretty extended levels here, getting a 3.7 reading on last Tuesday and Wednesday, showing some oversold levels here as this market could use a little bit of a relief rally. There is plenty of resistance here in this 410 to 415 level. A lot of supply built up here, as well as this declining moving average coming, 20-day moving average coming down into it. So look for the selling pressure to come from here. If we do need to see a little bit deeper of a pullback up towards this 50-day moving average, we do have plenty of resistance overhead with these declining moving averages and resistance levels overhead. So bears should continue pushing this market lower, and we should continue to see cheaper corn prices throughout the summer. Just might need a little bit of a relief rally here in the near term, but we should continue to see this corn market sell off. Next up, we've got our crude oil market. Last week, we had 5 red days with this market just showing nice selling pressure all week long. We did see that little shakeout probing this prior swing high from back in the middle of July. We did see not last week, but the week prior, nice push up into that $70 level before seeing a nice rejection here. This market has been feeling a little bit heavy recently, and a nice steady selling pressure all week long, getting a nice close here on Thursday and Friday here below the $64 level, which is our key level. Below 64, we expect to see this downside continue flushing down here towards the $60 mark. This market has seen very little volatility recently, as there's not a whole lot of excitement or incentive for higher prices in this oil market right now. So we do expect to just see a nice slow bleed lower here and see this market just slowly drift down here towards the $60 mark. However, if we do get bids above 65, we could see this market continue to stay range bound here, as we have seen over the last month or so here, higher highs and lower lows here. So market just not really seeing some real directional moves, as we've kind of been trading sideways. But here, as long as we continue trading below 64, we should see the bears continue to put some pressure on this market and push these oil prices back down towards the $60 level. So look for that downside to continue here in this oil market. Next up, we've got our equity indexes. Last week we did see a nice recovery here across each of these indexes, with the S&P, NASDAQ, and Dow showing pretty decent recoveries. The Dow was the weakest of the 3 indexes last week. Nice recovery there on Monday, however, just kind of hanging steady here between 44 and 44.5 on this Dow index, but good supportive action as the bulls continue to buy this market up. NASDAQ showing a nice strong push all week long, just falling short here on Friday of those prior all-time highs. We should see those all-time highs come in early this week, as we do have some nice momentum higher here. And this S&P index here also showing a nice recovery from the 6240 level, which was a key support level dating back to early July and late June here. So good support there at that 6240. This will be our bear pivot. As long as we remain trading above it, we should see upside here in the stock market. And our bear pivot was last week's high up there, 64.26. If we get bids early this week above it, we should see new all-time highs print in a hurry. Each of our indexes should be pushing up there into new all-time highs as this remains to be a very strong environment for stocks right now. Look for the upside to continue. Last up, we do just have a couple events to watch this week. Big picture items are inflation data coming out on Tuesday and Thursday before the open. We do have CPI Tuesday morning, an hour before the open, and PPI coming in on Thursday, an hour before the open there. Other than that, pretty quiet news week. So we'll just have to wait and see how this market reacts to that inflation data. However, these equity markets remain strong, and we should see continued upside here as these equity markets continue to prove their strength and show just a nice healthy environment for the stock market at the moment. Other than that, pretty quiet week, so but lots of opportunities waiting for us. So everyone have a good week 32. We'll catch you tomorrow night for closing comments.